What? All right, beautiful. Okay, so last week I gave an assignment, and a few of you answered yes. A few of you answered the question. So I actually pointed out to you how a swing is formed, or how a high or a low is formed. Okay, and then I got responses from some of you, but not everyone though. And the responses I had was quite okay. But for a few who were not able to answer, let me try and clarify things well for you. A few of you, I mean, you were not able to answer it as I expected. Okay, a few wasn't able to answer as I expected. So what I intend doing today is that I want to clear the air before we continue. So assuming we have this kind of setup, okay, we have this kind of setup. Do we have a high or a low formed on a swing high or a swing low formed on any of these points? No, we don't have any swing formed on any of these points. So this one cannot be, because I said the candle in the middle to the left and to the right. That doesn't mean that if we have something of this sort, the candle in the middle automatically becomes a swing. It is not a swing. A swing point or a high on a candle should either be a point where we have the candle to the left or to the right is lower than what is in the middle. So for instance, this particular candle, in this context, we are not using the bodies of the candles, okay? We are not using the wicks. We are just considering the body of the candle. So assuming we have something of this sort, of this nature, we have one candle form first, another one forms. So let me even add more candles. So assuming we have a very strong candle coming from this point, and then it comes all the way. It comes all the way from this point, and then it comes this way, and then we have something like this. And then let me add another one. So for instance, we break further down into this side. Now, what is the swing that we have here? What is the high point that we have here? It is this point. Okay, this is a swing high. This is a swing high. So for instance, those of you who were sending me your screenshots and all that, I was expecting that you were going to say that this particular one here is the one that is the one that we are going to consider as the swing. Okay, so for instance, if this was the wick, nicely, this is what we consider as the swing. So for instance, even if this particular candle here, okay, was on the same line with these two candles, and yet its wick was higher, we consider it as a swing point or a high. Okay, so take note, this is how swing highs are formed on the chart. Okay, so we have one candle to the left, lower by if it has wick or not wicks, and then the one in the middle higher than what is, even if it has wicks and it is still not higher than this, it still defines it. So now we'll go to our chart and we'll be able to define it well on our chart. Okay, so now let's go to our chart and see how well we'll define those swings. So this is a typical chart we have here. Now you all understand highs and lows. Okay. Now what I'm going to do is that I'm going to add on to the swings. What I'm going to do is I'm going to add on to how they play on the market, so that when we get there, we'll be moving. I want us to move at a very faster pace, okay? So what is the importance of having swing points or having a high and a low on the market? Oh my goodness. Okay. So I'm going to add on to why we have swing points and swing the highs and the lows on the market. What do they do? How does it affect us when we are trading? Okay. And how can we use them to trade? All right. So beautifully, I'll show you today. All right, let's go on. Now, from this point all the way to this point, from this point all the way to this point, there are a lot of swing highs and lows. When I say a swing is simply when we have a market move from one point to another, okay, when it rallies from one point to another, where we can see either a reversal. So for instance, if we have price moving from this particular point here all the way to this point, is a swing. Okay, so like it's some form of movement. This is just a basic for newbies to understand, for those of you who are very new to the market. So it's a movement, okay? So price moves from one point all the way to another. Okay, so we consider it as a swing. Okay, we call it a swing. So for instance, if we have market moving from this point all the way down here, is a swing. Okay, market moving from this point to all the way to this point is a swing. So you could see that the market is actually moving in that format. Okay, it moves in swings, like from one swing high to another swing low. Okay, to another swing high. So price moves in that order. All right. Now let's identify the various swing points on this chart as I defined to you earlier. Now I want to point out some areas, and now I want you to put your answers in the comment and your chat box. So from this candle to this candle and then this candle, do we have a swing here? Do we have a swing here? Or do we have a high or a low formed in here? And what type of is it a high or is it a low? What type of structure is formed in here? I want answers. So consider this candle, this one, and then this one. Someone said, yes, we have a swing. I'm looking at only these three candles. I'm not talking of from this particular low to this high. I'm talking of good. I'm talking of this one, and then this one. Does it constitute a high or a low? It's a high. Awesome. The same level, I think, is a high. Good. So we have a beautiful high in here. Okay. Excellent. We have a beautiful high happening in here. Okay, that's great. Okay, I like the answers. We have a beautiful high happening, occurring in here, because the candle to the left, although has a wick, let me quickly zoom out for you to see well. The candle to the left, although it has a wick, but look at where the wick ends. It is still lower than the wick of the candle in the middle, and then the candle to the right of it. Or it also has a wick, but it is still lower than that of this one. So we have a high formed in here. Okay. So you could see from this point, we had a turning to this point. So now from this point, candle turning all the way coming down here, it comes to form another type of setup here, which I believe by now your eyes are trained to see. We have a low formed in here. We have a low. So this candle is high. The low of this candle is much lower than the one to the left of it and then the one to the right of it. So we have a low. Okay, so from this point to this point, we have a swing. And then let's look at it again. From here, we move all the way up this way. Okay. Now, for some of you, you may not easily see. Okay, so let me quickly zoom out and show you this. There are some particular points on the price or on the candles that you won't easily see which one forms the swing or which one forms a high or a low. There is always a point where we are supposed to have the high or a low on a particular price point. So for instance, as I put this cursor on this particular candle here, um, I have deactivated a lot of settings on this platform. It would have shown you at the bottom. It would have shown you where is the low, where is the high, where is the opening, and where is the close. As I told you, bullish candles always open at the bottom, they close at the top. Where it has the body, it opens here, closes here. Now the wick shows us where the high will be. So the top of it is the high, and then this will be the low. So this candle and this candle, you could see that they're almost matching at the same level, but the reality is that one of it is higher than the other. Okay, you may easily not see, but upon further zooming out, this one here forms the swing because this one is higher than this, and then this. So we have the high formed in here. Okay, then we have the rally down. All right, so that is the definition of swings. When we have highs and lows, this is how we are looking at it. So we have another one. It rallies down to form this low here, up to form this high in here, and then onwards, and then it goes. Okay, so that is how highs and lows are formed. For those of you who submitted your assignment, I noticed that some of you indicated a typical example is someone indicated an example like, okay, this is a high and then this is a low. And then I'll see that the next candle after the low too, there's a dot, or there's a dot somewhere before even, or for instance, before the low, there's a dot at the candle before the low. And this high, before this high, there's a dot here indicating that this is the high, which is not correct. The high is always the one with the highest point. And then it has to the left and then to the right of it, lower highs. Okay, beautiful. Beautiful. Now that we have understood highs and lows, how does highs and low play in the market? What is the impact of having highs and lows on the market? So on the market, we have something we call market seeking for liquidity. I don't think I should delve in there now. But what happened on the market is that the market is always sweeping the highs and the lows. Okay. The market is always sweeping the highs and the lows. Now, so let me give you a typical example. So for instance, in as much as we have a lot of, watch this, in as much as we have a lot of lows formed in here, we have a low here, a low formed in here. Let me use my annotations to show you. So we have a low formed in here. We have another one formed in here. We have another one formed in here, another one formed in here. Now, these are all lows, right? Beautiful. Another one formed in here, this one. Now, you'll notice something, that how do they really play on the market? What is it important? In as much as we have lows and we have highs, market is always attacking highs and lows. Okay, market is always going for the highs and lows. So in as much as we have these lows, automatically and obviously, market will definitely come down at a point to take all these lows. So watch this. This low, this low, I'm extending the line for you to see. This low, this low, all the lows you may see on the market. Market in a way, when we form the highs and lows, so all these lows that were formed, so nicely when market traded and got up all the way into the sky, look at what happened. At a point in time, the market began to reverse, to take down the lows, to take down the lows. So these lows and the highs we see on the market are just the framework that the market, or is in one of the contexts for the market to move. Okay, they are the context within which the market moves. And when the market are moving towards the highs and the lows, what it means is that the market is actually seeking for liquidity. Liquidity is always resting above and below the lows. And what type of liquidity is resting below and above the lows? We call it buy-side liquidity and sell-side liquidity. So take note, buy-side liquidity and sell-side liquidity. What is resting below the lows? So under the lows, we have what we call sell-side liquidity, resting below all these lows that I have indicated there. We have what we call sell-side liquidity, resting below them. So the market will always attack the sell-side liquidity, as well as if we have highs. So for instance, we have a high here, we have a high in here, we have a high in here, Let me erase the chart. Just a second. So with the highs, so we have one high in here, we have a high in here, we have a high in here, we have a high in here, another high in here, and then so on and so forth. We have a high in here. Now, watch this. You could see that the same thing we did for the buy side, the sell side liquidity, which was the low. Now, the same thing happens to all the highs. After price took down all the low resting, traded back to the low that were resting below, what happened? It went back again to take all these highs. Price traded back again to it. Price traded back again. Price traded back again, and so on and so forth. My lines may not be straight, but I'm just trying to depict something for you to see. All right. So price trades back above all these highs and take what we call buy side liquidity. So take note. What is resting above the highs is called buy side liquidity. Okay. So basically, we have a group of traders on the market. We have what we call retail traders, okay, retail traders, and we have what we call the market makers, or we have what we call the institutional traders, okay. So the retail traders have their style of trading, and their style of trading is more with indicators, okay. And with the indicators, it tells them when to buy and when to sell. A typical example is retail traders will add some group of indicators to their chart. So for instance, let me try and add an indicator. Awesome. So I have added an indicator to my chart. Can you see the blue line that has been added? Can you see this blue line? Beautiful. This is one of the type of indicators that people use, or the retail. So your training is for you not to become a retail trader, but rather we are looking at you becoming an institutional trader. Okay, good. I want to make some adjustment here. Good. So now I just changed the level. So look at this. This is what retail traders do. They draw a line. This is one of the indicators. It is called a moving average. They draw a line. This is an indicator that the platform provides. And what they do is that whenever the market crosses this line, they say to themselves that we are selling. Whenever the market is above the chart, or above the candles, what they do is that they sell. And whenever price is below the candles, they buy. This is just something to just signal them to buy and sell. So for instance, if we're here at the moment, the line is above the chart. So here, the retail person is selling because the candle, the indicator tells the retailer to sell. Another thing retailers use in their trading is called resistance and support. A typical example of that is this. A typical example of a resistance and support is, for instance, they draw a line like this. I hope you can see my line well. They draw a line like this. And what do they see? They say that price traded to this line and got rejected, and traded again and got rejected, and broke the line up and traded above it. And as it has traded to this line, the retail mindset is that as it has traded and hit this line, now this line is called a support. Why? Because on this line, price will go back up. and that when it is trading below it, it will prevent it from going up. So when price is trading below this line, they will call it a resistance. So they just rule lines at a point on the market. For instance, a typical example is this. When price traded and got here, what did price do? It got rejected and it came down. It traded down, right? It was trading bullish and then suddenly it became bearish. It traded back to the line again and then bearish. And then it traded bearish and then it broke above it. So when price breaks above, when it is preventing it, they call it a resistance. But when it breaks above it, they call it support. So when it breaks above, what they do is that they buy. And then price comes back to it. And then the mind is that, okay, in as much as it is a support, we'll still buy. And they will buy. And when they buy, watch this. When they buy, now it trades back. Instead of it going what they said it was supposed to do, it's supporting price to go up. Rather, it sold. So now they are back to their old level again that, okay, now we are trading below the line. So it is a resistance. So it prevents price from going up. So when it gets here, they sell. When it gets here, they sell. When it gets here, they sell. But rather, it goes opposite. It goes up. So this is how retailers trade. But then it is not what we are trading. What we are rather looking for is liquidity, okay? What we are seeking for is liquidity. Now, as I indicated to you the highs, this high, this high, this high, okay? All these swing highs that I indicated to you, they are swing points that we use against the retailers. So in as much as the retail person thinks that when market gets to a high like this, it should reverse. Rather, we are looking at the market taking down highs. So so get it. Retail mindset says that when price gets to a level that they call so they can draw lines on all the highs. What they will do is that they will draw lines on all the highs. Instead of you indicating the highs that I told you, rather they'll draw lines on all the highs and say that when price gets to the high, price will not go. Now watch this. This is a high, right? High number one, this one, high number two, this one and this. And then this is the third one. Now watch. When price, let me even add this. This is the high number three, high number four. Now watch this. When price got to this high, and then it reversed and came down all the way and came back. When it got to the high, did it reverse or it traded through? It traded through, right? It broke the high, traded above the high. Look at this high too. What did it do? It traded above that high. Now the retail is waiting to sell. That is why we have what we call buy-side liquidity. So in as much as the retailers are waiting to say that this is a resistance level to sell, it is providing us more opportunity to buy. So on the highs, we have what we call buy-side liquidity. So on this high, retailers will think that, oh, here they have to sell, they have to sell. The market acts as though it is selling, then boom, it buys. So that's what we call buy-side liquidity. So it's providing buying for the market makers or the institutional traders, okay? Any point that the retail mindset says that, okay, this high is a resistance level, so we want to sell. This high here will prevent price from going up, rather. It's providing us with what we call buy-side liquidity, okay? So that is how we use highs in the market and the lows in the market. So anytime we have a high, we have what we call buy-side liquidity resting above the highs. So market always goes up and takes down the buy-side liquidity. Okay, so that is how the market really, really, really works. Beautifully, this is how the market works. So this is how highs and lows play in the market. The same thing with when we have lows. Okay, when we have lows, what we have low, the market maker or the retail mindset is that when price gets to this example, this low resting in here, when price trades and gets to this low, it will hit it and just bounce off right after when it hits the line. But watch this. Right after it bounced the line, it broke and then it sold. So here, all their buying orders, the retail buying orders has been triggered, and then it will go and hit their stop loss, and then they are out of the market. Okay. But you, as an institutional thinker, you know that we are seeking to take liquidity below this. So we rather want to sell into this area and take the liquidity beautifully before we frame our, if you want to frame a buy, before we frame our buy. So this is how the highs and the lows work on the market. The highs and the lows are not meant for you to put what we call, how do we call it? You put resistance and support. No, it doesn't work that way. We are looking at buy side liquidity and sell side liquidity. Okay. So where did I say buy side liquidity reside? So let's look at it again. Where did I say buy side liquidity reside? Buy side liquidity reside where? I want answers. Where does buy side liquidity reside? I want answers. I want answers. Okay, in the chat box. Okay, in the chat box. Above what? Above what? On top. Okay, beautiful. Yes, on top. You've given an answer. Okay, above the high. Thank you. Thank you. I want answers. Someone's above the high. Someone's on top. Where does buy side liquidity reside? Buy side on top of the candles. Good, 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 good. So all the areas that I have indicated are all areas that has buy side liquidity. And watch beautifully. Couldn't you see that price traded and took down all those highs? It is as easy as that. That price will always seek for buy side liquidity on top of the candles, on the highs. On the highs, price is always seeking for buy side liquidities on the highs beautifully. And then what happens at the lows? What happened at the lows? So for instance, now that we are trading at this point, what do you think would automatically happen to these lows that are already here? What do you think will happen to them in future? If we have a framework here that shows us that we want to go down, what do you think will be our target? Our target will be this sell side liquidity. So excellent. Price will trade below the continue. You think below the what? So sell side liquidity rest below where? Where does sell side liquidity rest below? We are now going detail. So now you have to pay more attention so that you get all the concept. Below the swing lows. Thank you. So all the lows that you can see here. So for instance, if I'll show you how, and for you to see that, okay, now at this point on the market, we are looking to sell, okay? And when we have that premise that, okay, we are looking to sell, now what will be our target? Our target will be that we are looking to target, or we are looking to take down some areas on the market. And those areas will necessarily be all this sell side liquidity, okay? So for some of you already on the market who know how to trade the Forex and all that, sometimes you open a trade and you ask yourself that, oh, I don't make profit because I couldn't stop my stop loss was hit. I was in profit, then I went back to make losses. No, you didn't place your target well. For instance, if you have entered a trade here, you are very certain that the price market is going down. Immediately price takes down this low. You should exit the market, take your profit here because we have already hit a target here beautifully. It's a sell side liquidity. So you sell to price get to this point and then you take profit. You don't wait after you has taken this sell side liquidity and begins to go back up again. Where are you expecting? Are you expecting price to go down till it gets to the bottom of the price? No. So you take profit at where we have our sell side liquidity and buy side liquidity. For instance, with the buys, assuming we bought somewhere here, okay, assuming we made an entry here, and then market goes down and then it begins to go up. It comes down and then begins, immediately we take down this high, automatically you should close your profit and be okay. Don't say that because it is going to go up. What if it doesn't go up to take all this buy side liquidity and then it reverses? Okay, so so the buy side liquidity or buy side, the swing low and the swing highs are points where we use it to anticipate that price would automatically go there. Okay, so when we take trades, we exit at those areas. All right, and it gives us the clue that price would automatically rally and take down those areas. So the high points on the market are actually meant for trading. Okay, so now you have 1 point. We have buy side liquidity and sell side liquidity. Okay, resting above and below the market. where market will automatically go there and take down those levels. Are we clear here? Are we clear here? That is beautiful. I know we are all in sync with what is happening now. Okay, so okay, great, great, great. So we have just a few minutes, just almost like less than 1 minute. So I want us to go off and then give you 5 to 10 minutes break, and then we'll be back on our screens again for the next session. Okay, so this is just the first session where we know our swing highs and then our swing lows. Then what is resting above and below our swing points. Okay, so I want us to go off and then come back in just a few minutes, and then I'll add a little skin and body to the swing low and then the swing highs, so that we are more clear with how to even use them on the market. All right. So see you on the page. If you have any comments, you can post it on the page. I want you to all put responses on the page. Sometimes after each meeting, okay, or even as we have a break now, put your response on the page. Are you enjoying the class? How is it going and everything? If you have any concern, put it on the page. If there are concerns that you have to direct them directly to me, you can send them to me on WhatsApp as well. Okay. There are a lot of people on the page. I want to engage most people as much as possible, because some people engage me at times that I'm not able to come online to teach. All right. So I want you to put it on the page for them to also know that the class is really going well for you all. All right. So I'll see you in the next. I'll send the next link on the page. All right. So let's end here, and then we'll be back.